Good morning, everybody. My name is Marcus King, and I have exactly 11 o'clock Eastern Time and 10 o'clock Central Time. So I believe it is time to begin this webinar. I just want to start by saying I appreciate everybody attending. This is, very relaxed, very casual. So if you have any questions, I will be monitoring the Q&A. I'll be also monitoring the chat as well. So if you have anything, feel free to just message me and I will be happy to, answer it. So the topic of this webinar is key audit findings and compliance audits. So my main goal here is trying to help you stay in compliance with BSA, ACH, Safe Act. I'm going to bring up to you many different findings that the auditors have, and hopefully this helps you keep in compliance. Helps the state or NCUA examiners not catch you on this. So that's my whole goal. Trying to help you have less findings on your state or NCUA exam, and hopefully, your camel rating will, go down. Well, if your camel rating goes down, I guess it would be a 1 or 2. So if it goes up, it might be a three or 4. So we want it to go down, kind of like the temperature settings, stuff like that. So bad joke aside. So here we go. Key audit finding and compliance audits. Disclaimer, this is not legal advice. These are just my opinions and my thoughts, and I'm probably not going to tell you anything that you don't already know. Um, yes, and I just got a question in the chat, and this webinar will be posted for later. There will be a secure folder, and the copy of the presentation will be out there along with the slides and everything else. So we can go back and look at it anytime that we'll need. And I'll also share it on my LinkedIn as well, and everybody will be able to access it as well. So just a little background. You probably won't focus on anything on the left-hand side over here. All I want you to focus on my baby girl, Caroline Grace. So that is her. She is a wild thing. So she is 18 months old yesterday. And she is a joy, except when she doesn't sleep at night, which I know every parent can, has that same feeling. So, just all, besides Caroline, what I want you to know is that I worked in the credit union industry for over 10 years now. I graduated college in like May of 2013, and then June of 2013, I started auditing credit unions and just worked my way up from there. So that's all the hoopla, resume. I don't think my resume's been updated in years, but that all would be stuff that would be on it. So topics for discussion today. As I talked about earlier, we're going to talk about BSA ACH, Safe Act. The first topic here is payroll. Then we're going to look at the Military Lending Act, some corporate credit cards, and then member credit cards as well. So this webinar is supposed to last about 45 minutes. Hopefully I can get you out of here in shorter than that. But that if you have any questions, I'm happy to answer them through email. I'm happy to answer them while we're here. So let's dive in today. So payroll. I know, during Christmas time and during, throughout the year, there might be times where we just want to give our employees gift cards. But I want everybody to know that if you give your employees gift cards, that is taxable income to the employee. So that must be reported, on their W-2s at the end of the year, and that must be taxed for the employee as well. So that's different from the board. The board are volunteers, so that doesn't apply to the board or supervisory committee, or if you give your director's honey baked ham at the end of the year or anything like that. But this is just gift cards for employees. If you give your employees $100 gift card at Christmas time, the employee must pay taxes on that gift card. So you must run that gift card through payroll. A lot of companies, they will, increase, let's just say that, you give them actually $100 gift card, but you actually put it in the payroll for 105. That way the, payroll taxes are covered or stuff like that. So just a little bit of tidbit information, want to keep everybody out of trouble with the IRS. We never want to get the IRS on our backs. So just basically that is anything cash equivalent is taxable. So other ideas, um, you know, low market value, flowers, fruit, items like that, meals. If you want to have an end of the year, Christmas meal, birthday meals, or anything like that, that you can absolutely do that. Parties, picnics, or anything like that, that is absolutely fine. You don't have to report that to the IRS. But the main thing I want everybody to remember with this point, it has to be something physical, something tangible, something you can put your hands on. I have one credit union that gives like each employee $100 per year, and they can go out to Amazon, and the credit union will order them something from Amazon on their list, and that is well and fine. The credit union keeps track of it. They can buy a set of golf balls, they can do cookware or whatever. The possibilities are endless through Amazon. But like I said, the main thing, if you give your employees gift cards during the year, that is taxable income. If you give them something physical, something tangible, they don't have to pay taxes on that. And I believe we have two questions that pop up. Yes, it's any gift cards, anything that is cash equivalent. So if you can, take a gift card to a restaurant and use it, then that would be taxable income to the members. And there is no dollar threshold. If you give them a, $10 gift card, then that should be reported as income for the employee. So, because you pay their salary, any additional thing will, you should report. So there is no threshold, and it can be anything that is cash equivalent. So a Lowe's gift card, a Outback gift card, or anything like that. Or if you go to Walmart and just buy a random Visa gift card for 25 bucks and give it to the employees, that is taxable income for your employees. Sorry, next up is BSA. I know we started off with the worst subject. The IRS and taxes are always everybody's, least favorite subject, especially during this time of year when, got to file your taxes with the IRS and everything like that. So, but moving on to BSA, this finding is what we have found a lot, especially when CUACG completes the BSA audit. I know, I know it's not a fun topic. I know it's a little more tedious when filing a CTR or a SAR, but we recommend that even though fields 9 and 9A don't have an asterisk beside it, that if the data is known to the credit union, then that data must be filled out. So if, for instance, if the credit union knows that the member is a teacher, then if you know that the member is a teacher, then you can go out on the Google and search NAICS codes. Then you can find what the code is for a teacher. So if you know any occupation, you can go out there and find the code for it. Now, it might be a general code. You might not be able to narrow it down, but anytime that we see the occupation completed, we recommend that the NAIS code be completed as well. So if you don't know the occupation of the member, I would recommend putting unknown in there. That way your auditors or examiners know that you just didn't skip over it. It's always better to, be as detailed as you can be. So if you don't know the occupation, just put unknown in box 9. And this is where we get this finding from. So as you can see at the top here, it says June 22nd of 2020. So right during the height of COVID, FinCEN released this for BSA filers. I'm just going to go read it. That way, nobody can, that way I'm not putting any words in FinCEN's mouth. I'm just using FinCEN's words. So FinCEN sometimes cites financial institutions for omitting data from CTRs and SARs. Some filers and their software providers assert that missing data is optional and therefore does not need to be provided. It is a common misconception that data only needs to be reported in critical fields, those marked with an asterisk. Thus, providers incorrectly presume that fields without an asterisk must be optional. The first instructions on the CTR and SAR forms reads, complete the report in its entirety with all required or requested or required data known to the filers. FinCEN filing exceptions or non-critical fields or expectations for non-critical fields are also addressed in the first question of the CTR and SAR frequently asked questions. These answers state, for both critical and non-critical elements, financial institutions should complete all those items slash fields for which they have relevant information, regardless regardless of whether or not the individual items are deemed critical for technically filing purposes. Therefore, the basic CTR SAR filing requirements that all data known by the financial institution and applicable to a data field must be reported. Filers do not have the option of omitting known data. I don't think it, gets much clearer than that. So sometimes, us as auditors, we get a bad rap for bringing stuff like this up to the credit union. Well, it's just, we are only the middleman here. We report, regulations, laws from FinCEN or NCUA or whatever governing body. So the FinCEN states that all data that the credit union knows, must be reported on the SARS/CTRs. So, that goes for NAIS, that goes for occupation or any of the other fields. The occupation field is the number one field that we see. So, if you know it, if you know what your member does, if you know what occupation you do, and you have to file a SAR or CTR on that member, it is recommended by FinCEN that information be completed. Like I said, don't shoot the middleman. We are just reporting what, these different regulations state. These two next things, you might find them to be very simple, but you will be surprised of how many times that we have an exception for these. So, or how many times that a question is brought to me. CTR must be filed within 15 days of the transaction. You know, deposits are counted individually, withdrawals are counted individually. That means you don't aggregate it together. If you have a $7,000 deposit and a $4,000 withdrawal, that doesn't equal 11,000 and you have to file a CTR. So it's just money going in the credit union and money going out the credit union. So, kind of why that. And like I said, this should be covered in your BSA training that you have every single year. So I'm not telling you any information that you don't know. Sometimes the daily CTR reports will, show ATM. Well, they always should show ATM transactions if they're reported. So sometimes a credit union will, leave out a $40 ATM withdrawal. Well, that $40 ATM withdrawal, if they make $11,000 withdrawal as well, that the CTR should be filed for $11,040. So that is a minor thing that we do find, but we do have to include it in our reports as well. So make sure that you include the ATM withdrawals. I have had a question come to me recently. I think the data processor, it was like a POS transaction, and for some reason it popped up on their CTR report or the daily transaction report. And a manager asked me, do I have to report a SAR or a CTR on this POS transaction? And I'm like, unless it is, $10,000 and one penny walking in or walking out of the credit union, you do not have to file a CTR on that amount. So 15 days from the date of the transaction. That is not 15 business days. It is just 15 normal everyday days. And SARS must be filed within 30 days of initial detection. I have underlined initial detection. It is not 30 days from the date of the transaction. It is 30 days from the date that the credit union knew about the transaction. So I've had credit unions say, I think Verifin, it might be another different processor, but Verifin gives us, the suspicious activity on like every Friday or something like that, and we might not review the report to the next Monday. So, say the transaction happened on the 5th, the credit union didn't receive the report to the 9th, but they didn't actually review the reports to the 12th. Well, the 12th would be from initial detection because that is the date that they reviewed the, report and they knew about it. So that the 30 days would start from the 12th there. And I know that is all confusing, but SAR, if you dig down deep into the SAR's regulation, it is 30 days from initial detection. It is not 30 days from the date that the transaction happened. It is 30 days from the date that you became aware of it. Now, if you became aware of something 30 days late, if it happened on the first of the month, but you didn't become aware of it from to the 31st of that month, then there might be some internal control weaknesses that you might be able to, do better and stuff like that. But SAR regulation is 30 days from initial detection. Then if you don't know the suspect, then you have 60 days. I would absolutely have a question. Would you recommend putting the detection date in the narrative? I would absolutely, put the detection date in the narrative. I believe the more information, you are able to put in the narrative, the better off you will be. So, if you didn't, if you, the transaction happened on the 5th, but you didn't know about it until the 10th, I would, put all information in the narrative. Who knows if FinCEN or the FBI are going to read it, but we should absolutely, put it in there. There have been many cases where, through SARS and through CTRs that, money laundering activities have been stopped, and the FBI has investigated it. So I don't, my previous comment, I want to take back, so any activity, if it's suspicious and meets the requirements for SAR, absolutely file it, because you never know, if the FBI or anybody else is looking into that individual. So, even though I think, sometimes a lot of credit unions, file SARs, they think, well, the, FBI may never read it, but, there are many incidences where, the FBI looks at it and it helps their investigation in many different ways. So, if you see suspicious activity, please file it, because you never know what's going on in other areas as well. OFAC and FinCEN are two different things. I have had many credit unions think, when I say OFAC, they think of FinCEN 314 transmissions every 2 weeks, but they are two different things. Per regulation, OFAC must be checked against your membership, on a regular basis. That can kind of leave room for interpretation. What is a regular basis? Can it be daily? Can it be biweekly? Can it be monthly? I just think it depends on the asset size of the credit union. If your credit union, has, if you're a $2 million credit union with, very stable membership base, doesn't lose too many credit, members in a month, and doesn't gain too many members in a month, then, I've seen examiners be all right with quarterly. But if you're a very large institution, probably weekly, daily would probably be best, or at night, or, at least weekly. So it just depends on how often OFAC must be checked. And of course, there's many different types of transactions. When all new members walk through the door and they meet your, criteria for becoming a member, you got to OFAC them. Wires, sending money, you got to OFAC, different parties on the wires. IET transactions, ACH regulation stipulates that, parties on the IET transaction must be checked against OFAC. Then of course, beneficiaries at account closing. So, beneficiaries may not be checked against OFAC anytime during, while the member is alive. But, if the member passes away and you have to, send a beneficiary a check at account closing, then you need to OFAC that beneficiary. Make sure that, they're not on the list or anything like that. FinCEN, of course, everybody knows that must be sent, that is sent every 2 weeks. And once that is sent, the credit union has 14 days to download and check it against their membership base. There may be, more incidences, usually when there's, a terrorist attack, or what happened in Israel several months ago, they may send additional, 314A requests that are not every 2 weeks, that are in between the 2 weeks, and you still have 14 days to check those against your membership base. Now, out of all the BSA findings, this is probably number one or number two, not downloading the FinCEN 314A request within the 14-day time frame. I don't know why, but this is one of the, Something might come up at the credit union where, the whoever receives these requests might be on vacation for a week, and that's why they have two people email addresses that this is sent to. So 314A is probably the number one finding that we have at credit unions. It being downloaded late or it not even be downloaded at all. I have a question that popped up. If our BSA software automatically scans beneficiaries against the 314 list, are we responsible for reporting a positive match even though we do not actively do business with that beneficiary? That is a very good question. I believe, it should be reported. I believe that even, if this incident would come up, you can always call the hotline. I believe that would be your best case scenario, would just be for you to call the hotline. This, if you look at the FinCEN OFAC Q&A questions, I think the question is number 95, does beneficiaries need to be checked against OFAC listing and account opening? They recommend it. Other people you talk to don't recommend it. I'm not going to, speak here or there on that. But, I think if this was to happen, that your best thing would be to call the hotline and just to see what they would recommend doing. Technically, you don't have any responsibility to give the money, to give that beneficiary money unless, that member were to pass away. But I think the best case scenario for this would just be to call the hotline and just see what they recommend you doing. I know you probably already thought of that answer, but that's the best I can provide you. OFAC, must be checked on wires, must be checked against, IATs as well. I think I kind of hammered the OFAC point by now. Wires, IAT transactions, must be checked prior to posting, prior to doing anything. So those are just the different portions of a wire that must be checked and different portions of the IAT that is recommended to be checked. ACH. The number one ACH finding that we have is a couple years ago, the National Association said that there must be a contact registration. So there was two types, ACH operations and fraud and risk management. So you have to register information with the National Association for who is in charge of operations and who is in charge of fraud and risk management at your credit union. I believe you just had to give, who is the person responsible, their email address, phone number, address, and different things like that. So this is the number one finding that we're still finding out there. So, in the finding that we have is that, if that employee leaves the credit union that was registered, you have 45 days to update that registration. So if your ACH person leaves, if they take another job at another credit union, another financial institution, you have 45 days to update the National Association to say that they left and here is our new contact person for fraud or risk management or ACH operations. And credit unions got to go back in, the site every year and, verify it at least annually. And here's what the portal looks like. If you don't know if your credit union has, done this, you can go into the website below. Like I said, this will be shared with everybody at the end of the webinar. We will put out there a secure link that you can access this. Or if you want to email me, I'll be happy to send you the email address. So all you have to do is go out here in the primary routing number and just type in your routing number. And then it will pop up whether your institution's routing number has been registered or whether it has not been registered. And if yours has not been registered, I would recommend that you complete it right then. Might as well get it over with. It's gonna be, I'm always the kind of person that if you email me telling me to call you, then I'm going to call you within 5 minutes, because if I don't do it, then I'm going to forget about it. So I'm always the kind of person that, if you need me to do something, I'm going to do it then, because I'm going to forget otherwise. So like I said, if you need this email address, feel free to email me and I will send you this. And then you can just go out there and just type in your routing number to see if your credit union has been registered or not. I mean, it's a very simple registration. Then at the end, you'll receive a form that you can print off and give to your auditors the next time your ACH audit becomes due. I have had several credit unions. It's unfortunate, but I had to correct them on the difference between stop payments and written statements of unauthorized debits. Of course, this is, for ACH transactions. This isn't for debit card transactions or credit card transactions. This is, stop payments are for, checks, ACH transactions, PPD transactions, all that fun stuff. So stop payments, the member must give you the stop payment information before that it hits the member's account. If they give it to you over the phone, that lasts 14 days. If they give it to you written on a form, then that can last, 6 months. Unless they renew it, then it can last longer. So, if they're afraid that, they wrote a bad or their checkbook got stolen and they want to make sure that, nobody writes the checks for forever, then they, the written stop payment form lasts 6 months unless renewed. So then the written statement of unauthorized debits happens after, the ACH clears the member's accounts. You know, the form must be signed and dated on or after the settlement date of the entry. So, if a member wants to get credit for their, an ACH that they didn't authorize hit their account, please fill out the written statement of unauthorized debit form, have them sign it. It has also been recommended that that be notarized. I think there was a court case came about where that was recommended. I'm not going to tell you whether or not to, have all written statement of unauthorized debit forms authorized, but that was a thing a couple years ago that they need to be notarized. Like I said, not speaking here or there whether it should be. But I think that was a topic that came about on the discussion board several years ago. So I know, like I said, in the very beginning, all this information. I'm not telling you any information that you don't know, but you will be surprised at how many exceptions we find with, just this simple thing. Stop payments. You got to give it, before it hits the member's account. The member has to give it to you before it hits their account, and written statements are after it hits their account. Safe Act. Safe Act audits are required for, your institution if they complete at least five, mortgages in a given year. If they originate more than five mortgages in a year, then a Safe Act audit must be had. So the credit union's MLS number and the mortgage loan originator's MLS number must go on the five following documents: application, closing, closing estimate, it should say loan estimate, then closing disclosure, note, and mortgage. Mortgage, if you're in Alabama, if you're in other states, it might be called a deed of trust. So just depending on what state you're in is what the mortgage or the deed of trust is called. So apologize for my mistake there with closing estimate. It should be loan estimate and closing disclosure. So, everybody knows that an MLO, must be registered with the National Association. But if a mortgage loan originator leaves the credit union has 30 days to update the registry to reflect this change that they are no longer, employed by the credit union. So this is one of the main findings that we do have with Safe Act. If an MLO leaves, you have 30 days to update the registry to reflect the change. And this can be, if they leave, if the credit union changes names, if the member or if the MLO gets married and they have a name change, then you have 30 days to update the registry to reflect that change. So like I said, it can be employment ceasing, it can be updated due to marriage or anything like that. This is another big one that I have found recently. Loan estimates must be issued within 3 days of the completed application. So once the member gives you the completed application, you have 3 days to, send them the loan estimate. So once, the member gives you all their, necessary information for the application to be closed, then that's when the timer starts that you have 3 days to issue the loan estimate. Then the closing disclosure, it must be issued within three days prior to closing. Now, funny story here. Auditors going, down a rabbit hole here, but I recently purchased a house or did a construction loan for a house. And I did not use any credit union or anything like that. So I'm not talking ill of the credit union industry. Well, that institution did not give me the closing disclosure until the morning that we were, set to close. I think I received the closing disclosure at like 9 a.m. and we weren't set to close till like 3 p.m. that afternoon. So I didn't audit their closing disclosures. I didn't audit my own mortgage file. I don't even know who audited their mortgage files or anything like that. But um, word of you know word of wisdom: make sure your loan estimates are issued within 3 days of the completed application, and make sure your closing disclosure is issued 3 days prior to closing. That way the member knows, know exactly how much money they have to pay at closing or how much money they need to be giving back at closing so they can make any arrangements like that. So, closing disclosure shows all the fees that, that the credit union gives and the member has to pay and everything like that. So, we kind of very similar to all the truth in lending stuff. You have to let the member know what fees are going to be charged. You have to let the member know, how much they have to pay and everything like that. This is another finding that we do see out there. A registered mortgage loan originator shall provide his or her unique identifier to consumer on 3 occasions upon request. So if a member requests it from you, before acting as a MLO. So, even though you might not know the member, you have to disclose your, unique identifier number, your MLS number, or through the originator's initial written communication with a consumer. So sorry for all my pronunciations. The more I talk, the worse it gets. So I apologize about that. But we are almost done here. So ways to accomplish this. The easiest ways, on your business card. If you have a business card and you're an MLO, your MLS number should be on it. In the signature line of your email address. So if you have an email address and you're your MLO, it needs to be on there. Two other ways. If you think about it, in this digital society that we're living in, I would say probably 80% of the members that are going to come into your credit or are going to come into your credit union or request a mortgage loan, they're going to check your website out first before they do anything. So I would recommend the credit union's MLS number and the MLO's MLS number be listed on your website. That way, most of the time, your website is going to be your first, communication that you have with with a potential member. So make sure that it's on there. That is me kind of reading between the lines here. That is just the world that we live in today. I believe that, potential mortgage applicants are going to check you out on your website first before they're actually going to call the credit union. Or if that doesn't happen, if they just walk into the lobby and say, I need to talk to somebody about a mortgage. I believe that, the credit union's MLS number and your MLO's MLS number must be, given to them. So the four easiest ways: put it on a business card, put it on your email address, put it on your website, and put it somewhere in the lobby. That way you have all your bases covered. Military Lending Act. This was something that came about several years ago. The two easiest ways, or the two ways that we see for this to be checked, would be, through the MLA database. I probably should have did, Military Lending Act not right after Safe Act, because there are a lot of acronyms: MLA, MLO, MLS. So I apologize for, if anybody's confused about that. That was not my intentions at all. So, like I said, verification must be checked through two sources. The two most popular are through the database and through the credit report. I tell everybody, just put it on your credit report. I think Equifax or TransUnion or whoever, might charge you like a couple pennies you know, per every time you pull a credit report that is on the credit report. So just go ahead, put the MLA disclosure on the credit report. That way, every time you pull the credit, that you can absolutely verify that it's on there and you can, check the box off. I didn't get into this time, but there are several exclusions where a member doesn't have to be checked against the Military Lending Act. If you purchase a vehicle, if you purchase personal property, mortgage loans, shared secured loans, those are not, you do not have to check the Military Lending Act for those. But if you do any signature loans, if you do a refinance of a vehicle, then those items do apply for the Military Lending Act. I think the auto dealerships and things had a say in that, but I don't that was before my time when the regulations came about. So any purchase that does not need to be checked against the Military Lending Act. But if you do have a signature loan for a member, if a member does refinance a vehicle, then that does apply for the Military Lending Act. Timing of the verification. So once you pull the credit, that credit report is good for 30 days for the MLA disclosure. Now, your policy might state that you will use a credit report up to 6 months. That is great for just your normal credit reports, but the MLA verification on that credit report only lasts 30 days. So, if you're using a credit report from 3 months ago for a member's loans, make sure you go into the MLA database and check the MLA verification again. So, like I said, even though your credit union might let credit reports last 6 months, the MLA verification will only last 30 days. So if a member, we all have members like this that every 2 months, a member comes in there needing to do a loan or refinance a loan or buying a new vehicle or anything like that. So if they do it every 2 months, every time, you need to make sure that the last MLA verification you have is under 30 days. If it's over 30 days, you need to, verify them again. And there's, other exclusions. If there's counter offers or stuff like that, if you negotiate with the member, then that can go up to 60 days and stuff like that. But, just for, 95% of the occasions, the original MLA verification only lasts for 30 days. If your last MLA verification is over 30 days, you got to pull a new one, whether it's through the credit report or whether it's through the MLA database. Sorry, I told you my pronunciation, the longer we go, the worse it gets. So I apologize for that. So credit cards, corporate credit card statements, very simple here. If your corporate credit card policy states that any irregular charges or missed receipts will be reported to the audit committee or supervisory committee or board of directors, please do that. So, everybody, please go out there and look at your corporate credit card policy. If it states any, irregular charges must be reported to the board or audit committee or supervisory committee, please do that. The simplest thing would be for, the CEO's corporate credit card statement to be in the board packet each month. That way the board, signs off on it anyways. The CEO might, has the ability to sign off on, any other, the CFO's corporate credit card statement or, any loan officers or anything like that. But, I would always recommend that the CEO's corporate credit card statement be signed off by the board. Like I said, the easiest thing to do would just be to put it in the board packet each month. That way they are aware of it and can approve it. Just simple things like that. Or, one of the big audit steps that we do have is reviewing the corporate credit card statement for credit unions. Most of the time, we don't see anything too outrageous on there. There has been several times where we question it. Was this totally necessary? Why is there 10 Kohl's receipts on here? Then we put that in our report, then report it to the supervisory committee as well. So, most of the time, corporate credit card statements are, fairly in line, but there are some times where we are left scratching our head at, I'm not saying that, it doesn't happen where the loan officer gives the corporate credit card for a personal purchase, that happens all the time. But there are other instances where like 10 Kohl's purchases or a Victoria's Secret purchases, we are left scratching our heads and wondering, was this really for a business expense or what happened here? Last section here, then I promise will open up for any question or answers, or at the end, I'm going to give everybody my email address. So if you need to email me about anything that you didn't want to bring up, or if I didn't make anything, crystal clear, I'll be happy to, answer any questions that you have. So, members credit card, the cardholder journal, if it has a negative credit balance for that, the credit union has 6 months to kind of let that, credit balance live out there. Credit balance, we're saying, if a member, let's say the member bought, $100 at Best Buy. Well, they make their credit card payment for $100, and they recognize, oh, I didn't need this TV I bought for $100, and they, take the TV back, and they have $100 credit on their account. Pure Reg Z, that credit balance can last for 6 months. Um, so, hypothetically, purchase over time should decrease that balance. But if it lasts over 6 months, then you need to give that credit balance back to the member. Um, for for example, or for instance, you know, if during that 6 month time frame the member, closed their account out and you can't contact them anymore, I would put the $100 as unclaimed property. Then whatever your state regulation is, after 3 or 5 years, I would send that money into the state as unclaimed property. So, most of the time, I would say probably 95% of the time, the member are going to use up that credit balance within 6 months. But if it does last longer than 6 months, then you got to give that money back to the member, refund them that money per, regulation Z paragraph 1026.11A-3. So now, several years ago, we ran into this a lot. We were reviewing the credit union's cardholder journal. The cardholder journal has all the credit union's members' credit cards on it. Um, so on this page, you can kind of see what it looks like. I kind of blacked it out so you wouldn't know the member names. And the first column over here would be showing the member's account number. So I tried to blot all that out. That way, any private information would not be shared. So this is the number one finding that we had when we reviewed the cardholder journal. I would review it by, I believe it is this column right here. This is the date of last activity. So if you find, I believe when I pulled this was like March 31st of 2019. So the audit date here would be March 31st of 2019. So if I found anything 2018 or before, I would automatically look at the date of last activity, then run over here to see if there was any balance. So the first highlighted one here, we had the last transaction of November 17th, 2008. I would quickly run over here and say, oh, there is a credit, there is a balance here, and this member is not delinquent. So that tells me that more likely than not, there was fraud on this account. And whenever the credit union issued the new credit card, this amount did not get transferred over. So you have a credit card sitting out there with $770, and this is technically a loan on your books for $777 that hasn't had activity since 2008. So that amount must be expensed out, charged off, whatever your policy states that you would do with this. So, and as you can see here, this was right at the very beginning when we started looking at the cardholder journals, very, looking at every line on it. The second highlighted part here, last activity date was 2013. They had a $188 balance on it. And of course, this was fraud as well. One of the very first credit unions that I started looking at this, there was some internal control weaknesses with their corporate credit card or with their credit card department. So I looked at their cardholder journal and probably found, I think, $40,000 of items that should be expensed off. That was a very uncomfortable conversation, me going into the manager's office or the CFO's office and telling them, hey, you have to, write off all this because you've had credit cards sitting out there with a balance with no activity. And when the fraud happened, the money, the fraudulent activity or the fraudulent balance didn't get transferred over to the new account. So this is money that should be charged off or should be expensed off. So if we're not one of your audit clients and, your cardholder journal hasn't been audited, please go out there and look at your cardholder journal to see if you have anything like this out there. So I would look at the date of last activity. If the date of last activity is, greater than a year per se, I would see if that card has a balance on it. Then my next step would be seeing if that card is delinquent or not. So if the card, has a balance, it's not delinquent, is more than likely that card had fraud on it and that balance did not get transferred over or did not get expensed out properly whenever the fraud happened. So yeah, I went kind of gave you the one that I wanted everybody to remember last, because this can be a big thing at a credit union if their cardholder journal isn't being reviewed on a regular basis. So I know I've talked for 45 minutes now. If there are any questions out there, I'll be happy to stay on the line until everybody leaves. But if you do not want to put a question in the chat or put the question in the Q&A, you can absolutely text me, call me, email me, um, join me on LinkedIn. I'll be happy to add, or be your connection. I try to put, tidbits of auditing stuff out there, kind of like we discussed here. So, like I said, I'll be happy to stay on until, the last person leaves. But if you don't have any questions, I appreciate your time today. I appreciate you joining me for this webinar, and I'm happy to, I'm always here. I'm always free advice. There was a credit union a couple years ago that said, I always call you first because I know you're free advice. So I'm always going to, give you my honest answer and try to keep you in regulations and try to keep you out of trouble with the NCUA or your state examiner. So I don't see any questions. So I hope everyone has a great day. And have a great week as well. And, have a great March and great rest of your year. So thank you for your time today.